Hello, I'm here to talk today about In Safe Hands, which is the title of a report about financial services going out to 2050. The future of financial services is obviously something that is absolutely basic to the ACCA Future Finance project. And so we thought that it would be useful as part of that project to have a video talking about the top level headlines out of this report as a framework for the workshops, and that we could let you read the full report if you want to, but these are the headlines. So let's get started. The report has got my name on it, Gill Ringland, but it was actually written by a group of people called the Long Finance Forum of Futurists, or L3F. And we worked over about a year, a series of workshops, gathering inputs from a wide variety of sources to reach what we have found is some really useful storylines that help people think about the future of financial services, and is being used by colleagues across the globe to work with financial services institutions. So what am I going to cover today? What I'm going to talk about is a little bit about the background, how we go about thinking about long-term change. We'll start thinking about what we can assume about 2050, and what are the big questions about 2050? What are the differences between what we can forecast and what we need to have an imaginative think about, i.e. scenarios? And we'll look at 4 scenarios in detail, how the world might be, and then think about what financial services might look like in each of those scenarios. So that's the map, the top level map that's replicated in the report, and we will start with why it's difficult to think about long-term change. Now, long-term change, it depends on the field you're looking at. When we're thinking about societal change, if we look to 2050, we've got about 2 generations of change there. And so we have to think about how drivers of change, trends, things that are happening now, but really at a very low significant level, might actually turn out to dominate by 2050. So that's the third horizon. Things which are maybe insignificant now, but will turn out to be really important in determining how the world and financial services is in 2050. A lot of planning, of course, goes on around what we call Horizon 1, which is things which are important now. And so, for instance, a lot of fuss about new regulations, fixing LIBOR, all of that is going to dwindle over time. So that's Horizon 1, things that are important now. And in between, we have Horizon 2, which are things that will become important by about 2030 and then fade away. And we use this methodology, which we call 3 horizons, a lot for thinking about the confusing and complex world of the future and trying to get some mental models out of it so that we can all talk about it and think about it. However, in thinking about the future, we have to be aware that by the time we get to 2050, there are very few certainties. Now, it used to be that global population was pretty forecastable. We knew about birth rates, we knew about death rates, and though people might migrate, we knew what the global number was. But life's different now. And what has happened is that even the United Nations, which is the best organisation for forecasting global population, the best it can do for 2050 is that the global population is somewhere between about 7 and 11. Well, that's sort of plus or minus 25%, which is an enormous number of people, plus or minus. Why does this occur? Well, it's because people are moving to cities, and that means that they have smaller families, and women get more educated, which means they have smaller families. At the same time, we get public health improvements, which mean that fewer children are dying and people are living longer. And it's the balance of how these increases and decreases in population sort themselves out that will depend on the final number. So we live in very interesting times. It's the Chinese curse. We live in interesting times. We don't know the answer. However, we do have to make some assumptions about 2050. And so what we assume in terms of 2050 is that the global population will grow. We think it's going to be about 9 billion, but we do know it'll be older, whatever number it is. We know that most of the additional people would be in Africa and Asia, and we know that as the world changes, there's going to be a lot of turbulence. There's going to be a shift to the east from the west, which is going to cause turbulence. The new world might not incorporate what we call the Washington Consensus, which is the raft of things that come out of an assumption that economic policy should be based around market economy and nation states, and it's often linked to support for the United Nations and all the other raft of international governance things that we've got at the moment. The new world might not be like that. We do know that technology is going to continue to make vast changes in how people do things and how society forms. And we'll talk a bit more about that in connection with financial services in particular. And we do know that as the world population increases from our current 7 billion, and as people's lifestyles change, and more people want to eat meat and to travel and to have electricity, that we're going to be testing the system limits of our globe, and that this is going to cause a lot of strains, stresses and strains. Trying to get our arms around the uncertainties for 2050. Well, the big uncertainty is, will the economy and society be similar to now or not? Will it be recognisable? Or will there have been some crisis, which means that a lot of the things that we take for granted have broken, and that we have to speculate what the new world might look like? And so in thinking about what the world might look like, and thinking about the 2 generations before 2050, what we can speculate is that there could be societies in which people have reversed to wanting face-to-face contact because some disasters have happened in cyberspace. Or it could be that there's been a lot of military and sort of civil disturbance, in which case people will start to feel much more happy with their ethnic or religious group, and there'll be a lot more virtual communities. So we can see different ways in which this new world might be. And I have to emphasize that we're not doing forecasts, we're doing scenarios. Scenarios are possible futures. They have to be futures where you can say, yes, I can imagine that. On the other hand, they have to be based on the best possible forecasts, but they are exploring the range of possibles. And so our scenarios explore those uncertainties that I was talking about, whether there is a world which is recognisably similar to now, or whether it's different, in which case it's based on a different sort of community, not the nation states. And also whether people think that geography matters, or whether virtual connections are the organising way. I mean, obviously, there'll be some face-to-face and some virtual, whatever the world's like. But we're talking about the balance here. And so very briefly, and we'll go on the next slide, start going through the scenarios in more detail. Second-hand is a world in which the Washington Consensus sort of survives, geography matters, and it's a bit like today. Visible hand is a world in which the international organisations have worked so well that the world has become very homogeneous, and this has been the source of its collapse, because very homogeneous systems are volatile. If the world breaks apart and starts to reform, we have long hand, which is a world in which a number of ethnic communities are interlaced across the globe, maybe a little bit like the caste system in India, where people with different belief systems and different ways of operating live next door to each other, but on a global level. And many hands is where the world organizes into city-states, and the city-states all have different brands. Some are wealthy, some are not, and that causes all sorts of interesting possibilities in terms of how people will want to live and how they will organize themselves. So 4 very different worlds. So taking the 4 scenarios in a little bit more detail, the second hand is where the Washington Consensus is still dominant as a concept, and nation states will have had diminished ability to manage their economies because of increased mobility and because of ICT. There hasn't been a crisis through food shortages, so GM foods or the creation of stem cell hamburgers has actually managed to feed the population. So there hasn't been a big crisis, but everything is getting very tatty at the edges. Nobody's found a new way forward. So it's a stagger-on scenario. Visible hand is where the Washington Consensus has evolved into a much more homogenized society. Technology's fed the population. ICT is very important, both for economy and society. But the lack of diversity has led to a breakdown. So visible hand explodes about 2030. Long hand is the scenario in which a crisis has caused the breakdown of the Washington Consensus, which could be due to shortages of food or flooding of major cities, wars, an economic crisis. I mean, the current economic crisis is really only European and a little bit the US, but if there was a global economic crisis, that could force a new paradigm to emerge. Whatever the crisis, society would then reform around affinity groups, which leads to a very complex set of interrelating communities, where the interrelating communities are linked virtually rather than by geography, and leads to a number of questions about how regulation gets addressed and how we tackle the systemic challenges that the globe is facing. And many hands is in some ways easier to imagine because it's city-states emerging out of this same crisis. But the city-states would all have very different currencies, very different regulations, very different standards. And that causes us to ask questions about how the world would start to reorganize itself and what would be the balance between international accord and whatever is decided by the city-state. So having thought about the 4 scenarios in outline, what can we say about financial services in 2050, independent of the scenarios, just by looking at the major drivers of change? So what we can forecast in general terms is that the population will be older. Financial services terms, that means risk averse. People will be looking for security, less innovation in financial services. Because of the changing balance of power, financial services accords will be much more influenced or dominated by Eastern rather than Western organizations. And also the balance of the population moving from the country to the city is going to increase the need for financial services. The impact of ICT. This leads to a couple of our major headline conclusions. One is that the financial services sector will reduce in size. The average bank employs about 10 times as many people for a given level of turnover as Google or Amazon. That can't last. The next thing that surprised us was that insurance is based on pooling of uncertainty. But a lot of the factors that we currently insure for are going to get less uncertain or more certain because of ICT. So if we think about better weather forecasting, so that we actually know what sort of climate change we're expecting and therefore where we expect earthquakes or floods. If we think about life insurance, the analysis of the human genome means that it's getting less and less uncertain when we're going to die. And so the whole complex built around insurance may well become very unstable by 2050, if not disappear altogether. And we also suggest in the report that financial services might be asked to manage natural resources as well as money. And when I've talked about the report in various fora, this has often caused the people in the audience to say, well, if the financial services people have made such a mess of it, why on earth do we think they could manage natural resources? So maybe there's a question there. So that's financial services in 2050, whatever the scenario. If we're thinking about second-hand, which we remember is the stagger-on scenario, it's certain that the ecology of financial services will be more diverse than it is now, so that there will be much more peer-to-peer lending, much more use of ICT, many more forms of financial services that we haven't actually seen so far. In this scenario, people will invest across regions, from Europe into the East, from China into Southeast Asia, in order to shelter from volatility. The ageing society means that more of an emphasis on pensions, and because in this scenario there are fewer large companies, there will be less trading in equities, and Singapore emerges as the most powerful financial services hub in this scenario. Visible hand, as we said, has disappeared by 2050, and it's replaced by longhand if the crisis was caused by conventional type wars or civil disturbances, and if it's caused by cyber scandals, fraud, then it's more likely that the fallout of society will be into many hands, the global city-states. In longhand, what we can see is that there could be 50 or so, some number between 30 and 100, loosely coupled transnational systems with diverse regulatory regimes. And so this would be strong links between people of a given ethnicity wherever they lived. So in the same way that non-resident Indians form a very strong link with India, there would be similar couplings right across the globe. So trust would be mostly within the affinity group. And since London and New York have got some of the most diverse communities in the world, I think there are 173 different nationalities living in London at the moment, this would actually give them a lead in maintaining their position as financial services hubs. Many hands. The city-state scenario. Well, most of the investment would be within the city-state, and wealthy city-states would provide pensions. Poor city-states would not. There'd be a lot of pressure from people wanting to immigrate into city-states. In city-states, one of the most valued things might well be a residence permit or a parking permit. Trust would be within the geography. It'd be about face-to-face. It's difficult to see how the global interconnections could be sorted. We've got a G20 which struggles at the moment. The idea of a C50, which it would be the mayors of the 50 city-states trying to deal with these things, we'd have to use totally different methods of coordination and cooperation. And in this scenario, if we're thinking about financial services hubs, there are probably half a dozen or so, and probably Istanbul would grow up as one of them. Okay. So those are some of the things that we thought about in each of the scenarios for financial services. So let me conclude by summarising some of our surprises. As I mentioned earlier, whatever the scenario, the financial services sector is going to diminish in terms of the number of people it employs. And insurance is going to be revolutionised, if not totally reduced, by the way ICT can reduce uncertainty. Second-hand, having looked at the other scenarios, maybe second-hand, staggering along, maybe that's as good as it gets. Visible hand, well, visible hand breaks down what a lot of people say they want now, which is better international regulation. When you look at systems theory and you look at the sources of breakdown of systems, a totally homogeneous system is much more volatile. And so a uniform global regulatory system could actually carry the seeds of its own disaster. Longhand, that's the virtual communities. That could be best for London in terms of its position as a financial services hub. And, when we look at many hands, the 50 city-states, that actually feels sort of real. So, I hope I've given you a mental map of what's in the report. I hope that you feel that these scenarios are all possible and worth thinking about. I look forward to any comments you have should you get the report from the websites, and being in touch as you facilitate your events.